except that they were done automatically and in large scale by institutions, and they were merchandised. People paid a lot of money to people to teach them how to put in a stop loss order. And what happened, of course, was that if you have a whole series of stop loss orders by very big institutions, you are pouring gasoline on fire. And when October 19th came along, you had a 22% shrink in the value of American business, caused essentially by a doomsday machine. A dead hand was selling as each level got hit. And 3 weeks earlier, people were proclaiming the beauty of this. Well, that is nothing compared. It was a formal arrangement to have this dynamic hedging or portfolio insurance sell things. But you have the same thing existing when you have fund operators operating with billions and in aggregate trillions of dollars leveraged, who will respond to the same stimulus. They have what we would call a crowded trade, but they don't know it. It's not a formal crowded trade. It's just that they're all ready to sell if a certain given signal or a certain given activity occurs. And when you get that coupled with extreme leverage, which derivatives allow, you will someday get a very, very chaotic situation. I have no idea when. I have no idea what the exogenous factor. I didn't know that shooting some archduke, would start World War I, and I have no idea what will cause this kind of a thing. But it'll happen. Charlie?
Yeah, and of course the accounting being deficient enormously contributes to the risks. If you get paid enormous bonuses based on reporting profits that don't exist, you're going to keep doing whatever causes those phony profits to keep appearing on the books. And what makes that so difficult is that most of the accounting profession doesn't even recognize how stupidly it is behaving. And one of the people in charge of accounting standards said to me, well, this is better, this derivative accounting, because it's mark to market, and don't we want current information? And I said, yes, but if you mark to model and you create the models and your accountants trust your models, and you can just report whatever profit you want as long as you keep expanding the positions bigger and bigger and bigger, the way human nature is, that will cause terrible results and terrible behavior. And this person said to me, well, you just don't understand accounting.
If 4 years ago or whenever it was when we started to liquidate Gen Re's portfolio, we had reserves set up for in the hundreds of millions and all sorts of things. And our auditor, and I emphasize any other of the big four auditors, absolutely would have attested to the fact that our stuff was marked to market. I just wish I'd sold the portfolio to the auditors that day. I'd be 400 million better off. So it's a real problem. Now, there's one thing that's really quite interesting to me. If I owe you on my dry cleaning bill or something $15 and they're auditing the dry cleaners, they check with me and they find out that I owe you $15 and it's all fine. If they're auditing me, they find out that I owe the dry cleaner $15. There are only four big auditing firms, basically in this country. And so in many cases, if they're auditing my side of the derivative transaction, what I'm valuing it at, the same firm may often be valuing or attesting to the value of the mark by the person on the other side of the contract. I will guarantee you that if you add up the marks on both sides, they don't equate out to zero. We have 60 some contracts, and I will bet that people are valuing them differently on the other side than we value them themselves, and it won't be to the disadvantage of the trader on the other side. I don't get paid based on how ours are valued, so I've got no reason to want to game the system. But there are people out on the other side that do have reasons to game the system. So if I'm valuing some contract at plus $1 million for Berkshire, that contract on the other side is just one piece of paper. It should be valued at a minus 1 million by somebody else. But I think you probably have cases, and I'm not talking about our auditors, I'm talking about all four of the firms. But they have many cases where they are attesting to values of the exact same piece of paper where the numbers are widely different on both sides. Do you have any thoughts on that, Charlie?
Well, as sure as God made little green apples, this is going to cause a lot of trouble in due course. As long as it keeps expanding and ballooning and so on, and the convulsions are minor, it can just go on and on. But eventually, there will be a big denouement.
My name is Ethan Berg. I'm from Cambridge, Massachusetts, and I'd like to thank you for the education you've provided, particularly with the annual reports. I've got 3 brief questions. Years ago, you wrote to your friend Jory Orens that you were applying to Columbia's business school because they had a pretty good finance department and a couple of hotshots in Graham and Dodd. If you were considering graduate or business school today, with which individuals or professors would you want to study? Second question is a friend who wants to know your thoughts on the concrete, cement, and aggregates business. And the third question is from my wife. You mentioned earlier if someone were buying a parachute, they wouldn't buy based on lowest bid. We saw you tooling around in a car this week that were to be bought today could probably be bought at a relatively low bid. As someone interested in your health, she's wondering whether you've considered a newer automobile, possibly one with lots of airbags.
Oh, actually, I picked out the car I have based on the fact that it had airbags on both sides. So that was a factor. It may have been the first car of its type ever made with airbags, but I think my car actually, it's both heavy and has airbags, and those are 2 primary factors in safety. I don't think I don't think a safer car is necessarily being made. It might be safer to drive around in a big heavy-duty truck or something, but I'm not ready for that. Incidentally, on a car, I look at that like anything else. It would take me probably a half a day to go through the exercise of buying a car and reading the owner's manual and all of that. And that's just a half a day I don't want to give up in my life for no benefit. If I could write a check in 30 seconds and be in the same position I'm in now with a newer car, I'd be glad to do it this afternoon. But I don't like to trade away when there's really no benefit to me at all. I'm totally happy with the car. I just don't want to trade away the amount of time I'd have to spend fooling around to get familiar with and get title to and do all the rest of the things. Pick one out, so a new car. But if there's a safer car made, I'll be driving in it. The aggregates business, concrete, all of that, those are businesses, and Charlie probably knows more about them than I do. We've looked at businesses like that. In fact, we've even owned a few shares at one time or another because it's an understandable business, and it's a business that, well, particularly if you get into concrete, cement, I mean, there have been periods of substantial overcapacity, particularly on a regional basis, but those are fundamental businesses, and at a price, for low-cost capacity and advantageously located raw materials and so on, we would do it. In fact, Charlie and I talked about one probably 10 or 15 years ago, quite a bit. And he's had a fair amount of familiarity with it. And what was the other one? I jotted it down here. Let's see.
He wanted to know what business school.
Business schools, yeah. Well, I would say this, that I think Bruce Greenwald's class at Columbia is very good. He gets in a lot of people that are practitioners. And will get out of control.